All right, welcome back, chat. We're gonna be discussing volume in this one. There's lots of ways to like identify volume, but one of the most important like factors when identifying volume, or like I'll say key confirmations that I use personally, are candles. Again, like I told you guys, candles tell you everything. This is why I did that part first previously, because learning about the candles, the time frames, and how it evolves around structure, and they all kind of just work together, right? Volume kind of plays a part of that as well. When you have structure, right? So going back to structure, you had like that Christmas tree looking thing. When you have this, right? When you have this in front of you, you know at what point price is going to pull back. Well, you don't know, but like looking at price, you can identify where the pullback levels are. So for instance, like if this is an uptrend, right? If things are going up here and price decides to reject off of some levels here, it comes down towards here now, you know for a fact now that like this is a pretty key level, all right? You know that if price is in this box here, what has the cleanest movement? Does this have a much cleaner movement, or does this green box? This green box might have more movement because you're going up, down, up, right? But you're going up, down, up. You're not actually going just up. You don't have like actual trend there. So I'll say this right here. This is what you want to focus on. You want to focus on the breakout, because that's where you're likely more going to have volume at compared to the green box, right? I rather the yellow box. The buy is above the yellow box instead of like the green box. So that's what you want to focus on when you're looking for opportunities in the market. You don't want to be part of the range. Now, as things get more advanced in this course, obviously like trainer range is okay. There's nothing wrong with doing so. But when you're referring to what has a much higher probability of giving you volume and a cleaner move, I'll say the breakout, right? So in this case here, you know, what'd you rather pick? Yellow box probably. So same goes with up here as well. Like when you have like this right here, right? This price went up, started to reject, started to come down, started to reject that zone. You now have a breakout above this range here. That's your breakout, right? So outside this yellow box, in the yellow box is your range, right? You have that up, down, up movement. Here though, you just have an up movement. So you are more likely to have volume when you break out compared to being stuck in the range. So that's like a illustration of like how you would ideally identify volume. Right now, another thing that is pretty important when it comes to volume is time. So I'm gonna do everything here in Eastern time, chat. So whatever time zone you're from, just know that I'm doing Eastern time, right? So the session that I trade is the NY session, the New York session, all right? And the key times for the NY session, I'll say would be 8 a.m. open, right? So it opens at 8 a.m. So you want to be there prepared for the markets, maybe like an hour to an hour and a half. Let's just put an hour because I've been waking up an hour ahead. So let's go 7 a.m., right? Like that is your open charts. And then 8 a.m. would be your like NY open. All right. So most volume, I'll put 3 stars there. When it comes to the NY session, you also have something called the COMEX open. Now, I don't know if there's a COMEX open for any other session. I have no idea, to be honest with you. But I know for an NY session, it has a COMEX open, and that's usually 8:20 a.m. Eastern. Not a bad time to trade at all. NY session, or what am I saying? COMEX open. All right, COMEX open. So I'll put this like I put NY open 4 stars. Let me put volume here and maybe like, actually, let me not give it stars yet, the rating yet, but COMEX open 820, and then you have the 9 a.m. candle, which for me will be the 4-hour candle. Now, you can say I guess it's just a new 4-hour opening. I mean, depending on the broker, it might just be a new 1-hour opening for you, not a 4-hour opening if you have a different rollover period of time. But 9 a.m. is something to pay attention to. So like that's something you want to be here for me personally. So I am here for 9, new 4-hour, and then obviously 9:30, which is your NYC open. All right, so this is like a lot for the NY open. Like this is why I love the NY session, because you have all of these different sessions, you have all of these different openings and things that may affect the way price moves during that session, right? So I come to charts at 7 and then NY opens at 8. You might get like an opening of volume, you might see a spike here or there, right? And then 8:20 usually is when you have that COMEX open, so you would see another pump. When it comes to like figuring out direction, usually it would be after 8:30. So between 8:30 and 9, pretty key time, which is why the 4 count is pretty important. You come for the 9 a.m. candle at 9 a.m. and you notice a new 4 opening. It would give you a bit of information, because that information you can use to identify where the next 4 candle is going, with the way it closed, with the way this and that happened, all right? And then you have the NYSE open at 9:30, which brings in that volume. That's when the stock market opens, right? So you have the NYSE open, which is equivalent to the NY open for the New York session. So this is what you want to pay attention to when you're trading. By the way, this is all Eastern time, okay? Making that clear. So East. This is what you want to pay attention to. This is all I do. So obviously, there are times where like you might not actually have volume during these periods. Like you might have a COMEX open that has no volume, right? So don't don't just go with the idea that, oh yeah, every day at this time you're gonna see a spike in the markets. You don't always get one. Higher probability to do so at these moments during the day, but you still want to analyze the charts and see what story the market's telling you, right, with the time frames and everything, like I said earlier in the last video. But something else to look out for is news. So news, right? So for news, I use the Forex Factory. That's all I've been using. There's a lot of other websites you can use, but I only use the Forex Factory. The Forex Factory just like, it will show you, I'm gonna show you guys in a second here, but it's gonna show you like all the folders that you have with every single currency. And if you go on the top right and you filter it out, you can actually select and choose which currency you want to focus on. So let's say you want to focus on the US, you can just filter out everything else but the US, and then you have news folders throughout the day that you could pay attention to, or you should pay attention to see what's happening. So this is what's called the Forex Factory. All right, so this is the Forex Factory. This is like, I think everyone uses this. But today, for instance, right? Today in the markets, you had 8:30 news. Okay, well, you had USD folders, right? We're trading gold. So when I'm trading gold, I look at the USD folders. You had 8:30 news, and you're gonna see that you had core PPI, unemployment claims. Now, personally, is this information important? Yes, it is important. And there's nothing wrong with knowing. There's nothing wrong with not knowing. You just gotta be aware that there's news. The reason why I'm saying it may not be too important if you don't know what's going on is because the volume that comes into this, like I treat news as volume. So I know for a fact 8:30 you're gonna have volume. So if I'm planning to take a trade at 8:30, I'm gonna say, you know what? Let me just see how that news candle forms. Let me just see what and how it prints out, because that may affect my analysis. News may affect your analysis, right? It's gonna get to a point though where news doesn't affect your analysis once you learn to read news with price action, which eventually, if I can get to it, I'll teach you guys in this course. But How I trade it is obviously I'm aware of the news folders, but I'm not really like, I used to like look at this, look at the numbers that actually come out. So like for instance, numbers came out negative here, but actual less than forecast is good for currency. So that is good for the dollar. Come out negative is good for a dollar. It came out, unemployment claims came out 242 over 221 forecasted, expected, right? Which means that it came out a lot worse. So actual less is good for currency. So like stuff like this would help you. Like I think today this came out negative. So it's good for a dollar. This came out neutral, so, or positive, sorry, 0.4 over 0.2. So that was also good for the dollar. The third folder that came out, actual greater, this came out neutral, but whenever it's neutral, I do notice that it's more so on the side of positive. So they all came out positive today. So I use that as, like today I use that as a confluence. And I said, you know what? Gold came out positive, or the dollar came out positive today, which means that gold technically should dribble down, should move down, right? So at 8:30, if you go to the folder, I think 8:30 was around like here. You didn't actually like move off the bat. Well, yeah, right at 8:30. 8:30 was around here, right? You can see you spiked up for a little bit, and then you hovered. Like this candle was like a 50 pip hover. It just hovered, and then all of a sudden, you start to just get higher, lower highs, and then all of a sudden you see a drop. So I think we got positions today. We got like 250 pips today, off of like 3 different positions. Somewhere here, and then somewhere down here, and somewhere down here. We use that as our catalyst today to get the direction where price is headed. Now, obviously, without news, I was still bearish because of the way the daily candle closes, right? But I don't want to get into too much information here. I want to, teach you guys as we go on. But if you know for a fact that the daily bias is headed a certain way because it needs to print this, it needs to print that, whatever the case is, or likely to print this, likely to print that, then you could use it as your idea as to how you're going to grab positions coming up or down towards that area. Now, if news comes out in that direction as well, so news came out good for the dollar, which means that it's gold likely to drive down, you can use that as another confirmation. But you don't want to just use like a one confirmation. You don't want to just say, okay, news came out positive, let me just take sells. Because sometimes it might not actually go that direction. It might spike and then hover the opposite way and then completely go a different direction. So you don't always want to rely on one confluence, obviously, right? You want to have multiple confluences. But today it was just understand the structure and price, understand the bias, and understanding just news, how that brought in the volume for us to move down. And that was the day today. But that's how I look at news, right? So obviously, as you go on to next week, you're gonna have more folders. Like, okay, so Sunday, nothing. Obviously, you don't really trade Sundays unless you have the Asian, but there's no NY session folders open during Asian. Monday, you're gonna have flash and manufacturing PMI, flash services. So I know for a fact at 9:45, I'm gonna probably like be aware. I'm gonna sit there and be like, you know what? NYSE opens at 9:30. Let me just wait an extra 15 minutes. Wait for it. Flash manufacturing PMI to come out, and then take trades after 10 likely, because you need 15 minutes of just it printing direction unless it prints immediate direction. We'll get into this later on how to trade news. But Tuesday you have core retail sales and retail sales as well. 8:30, those two folders come out, and on Tuesday I'm gonna be aware of, this has a lot of folders this day, but 8:30 you have news, so I'm gonna be aware of that. And then obviously FOMC, which is one of the most volatile folders, that comes out on Wednesday at 2 p.m. It's always gonna be 2 p.m. So that comes out, FOMC statement, and then you have a speech at 2:30, so you want to be aware of those times. The speech, whenever there's a speech, I also don't know how long it goes on for, but I know for a fact it's at least 30 minutes. So between 2:30 and it starts at 2:30, right? Between 2:30 and 3, you're gonna have a lot of volatility, and then usually after 3, you would have more so direction for the rest of the day. So from 3 to 5 until your close, right? You have more so direction. But 2, you have a spike. 2:30, you have like direction starting to print, and then direction confirmed usually after 3 for the rest of the day. So that's FOMC. And then Thursday you have final GDP and all these folders here, right? So you get the idea of like how it prints on Forex Factory. And you just want to be aware of these times, be cautious, and maybe sometimes you can use it as your confirmations and confluences. So just pay attention to the actual and forecast. All right. So let's say like going back to this for a second, flash services PMI. What are they expecting? I guess there's no expectations here yet. Am I tripping? Yeah. So I guess actually, yeah. Usually there would be a forecast the day of. When there's a forecast, you can kind of click on it and see like if the actual number coming out above or below whatever they're expecting is good or bad, right? There'll be like a little side note here like there was today. It'll say like actual less than forecast is good for currency, right? So then you can go off of that. But that's like volume for you. Volume with candles now, going back to candles, right? So how do you determine volume? Like if you were to look at like, let's go to like a random area. Let's go to like, what's something I can't see? Like let's go to here. All right, I don't know where that is, but what do you have here? All right, so you have to identify volume. Right, what day is this? December 2023? 2023. So remember what I said, chat, about understanding structure? So like when you look at this structure, right? I don't want to get into support and resistance just yet, but structure, what do you see here? You see higher highs, higher lows, right? So you have some type of like a level here that's, you know, we're kind of bouncing off of. Not confirmed yet, but you also have the level up here, which price bounced off as well, right? Because this is the range it's in. So you know for a fact in this area, if we're going to range, it'll likely be in this area because anything above here would be a lot cleaner. Anything below here would be a lot cleaner. Anything in this area is going to be a lot rangier. So you know for a fact, if there's going to be volume, it is more likely to be above here or below here. So let's go ahead and put like, I don't know, green box here, and then like, I don't know, orange box here. All right. So like if you're going to have volume, it'll be in these levels. It won't be in the between the yellows. So let's go ahead and just play this and see what happens. I'm gonna show you guys how the volume looks. So you're still ranging, not breaking out just yet, still ranging, right? Like something wrong with trading the range, but oh, starting to break out. You're starting to break out. You can see the moment you started to break out, what was your biggest candle here, chat? This candle here was, I guess this candle was pretty decent, 150, but like these candles up here are pretty decent as well, 150, right? And you still have a lot more range to go if you continue to drive up, but you're gonna see that like more than likely you have a better confirmation getting in above here than getting in this range here. In this range is not that, it's still tradable. I trade the ranges all the time, nothing wrong with it, but when you're looking at volume, and I'm discussing purely volume here, you would likely have more volume once you break out. And you can see the moment you started to break out, you started to print candles above this yellow box here, you had a pop effect, right? So you know for a fact, okay, let me get prepared to look for buys here now. Let me get prepared to look for buys to take it up towards the next zone because you have traffic going up towards that area, right? So it looks very simple, right? You draw two lines and you just wait for a breakout. That was like kind of what I just started to do when I was like in, I think it was 2020, 2019 when I first started streaming. All we did was take breakouts. We didn't take anything else, but this is all we waited for. We're learning about volume. And that's an indication of volume, right? So let's see where price goes. Like I don't know, I have no idea where it's gonna go here. Because I think you need a bottom wick, but let me just not get into all of that stuff. But let's see you respect this 20.48 level or not. Okay, so you're respecting so far. Is that it though? All right, so I guess you came up, you tapped these zones here, and you started to range. All right, cool. So yeah, price did complete its actual push up. Now it wasn't the cleanest push, I'll say. It wasn't the cleanest push. There's some range here, right? But you had a breakout out of this area and you started to confirm that direction. And you had, I guess, more volume off of this push and maybe this push here, right? But you can see like there was another range that was printed here too. Something else was printed here, right? And then after you broke above there, same thing as here, you just popped, right? So you just popped again and then you came up towards that resistance level. So that's like, that's kind of what and how you would identify volume as an example. Let me find one more example for you. Let me go to like here. And it's any time frame again, right? It doesn't have to be like the 1 to 5. It can be any time frame. It will give you an indication. Obviously, the lower you drop on time frames, the smaller the ranges would be because less information is printing. So you drop to the 1 minute, you have a smaller range. You drop to the 4, you draw the range out, you have a much bigger range. So like that's what you want to like, know and understand, because candles are candles at the end of the day. They'll print whatever they want to print, but you have to know that like each time frame is telling its own course, its own story, right? So here, for instance, let's go to the 1 hour time frame. Try something new out here. So what do you have here? I mean, this might be a bit advanced, maybe not. If you've been on stream, definitely not advanced, but like you have support here. So I'm just gonna draw it to give the example. You have like resistance here. This is the range that you're in. Now, pay attention to the inside the ranges. You have another resistance here. You can say this is the current range that you're in. So in this orange box here, you are more likely to range. Once you start to break out, you're gonna see a pop. If you break out to the upside, you're gonna see a pop up towards here. So let's go ahead and draw a line up towards here, right? Because that's the next area. Again, this is advanced, but I'm just gonna identify volume first. Now, if you start to close below like 1987, you're gonna continue to see a pop down towards this wick here. So let's go see what happens here. But you're gonna see in the orange area, you are more likely to range. Let's see how it goes. All right, so you came up. Okay, there you go, you tapped. I was gonna say, come on, man, you couldn't just tap the orange zone. So you came up, you can see like in this orange area, you are more likely to range. Obviously in this case, it didn't range too much. It just actually reversed, right? But once it broke above here, you're gonna see this candle close above, you see a pop, right? And that's what you wanna look for. That's how you identify volume, and that's how you would know if price is gonna continue pushing on the next move, right? Obviously, if this candle now decides to like close back into the range here, then you know that, okay, maybe you might spend the session ranging, and you want to just say, you know what? It's 10 a.m. I've been waiting all day for a move. Fuck it. It is what it is. Let me just wait. Let me just come back tomorrow, because this is a range that you've been stuck in for a minute, right? So that's pretty key to understand, because it gives you cues and signs of when you should be on the charts versus when you should hop off. Because there's always cues to hop off, right? There's always gonna be cues to hop off. So that's volume for you, chat. All right, let me see. Let me give like one more example of volume. It's pretty straightforward. Like even when you're looking at the charts alone, like you're gonna see it. Like you're gonna visually see like what was the greatest moves here. Oh wow, volume. Yeah, this shit ranging. This is ranging. This is ranging. This is not bad. Like, but you can see like wow. Look at that one giant candle, pause. But look at that candle and look at all these other candles after in the ranges, right? Like there's a huge difference between the two. So like you want to just make sure you recognize that. Doesn't mean that any of these boxes here aren't tradable. And this is definitely tradable. These are like hundreds of pips, right? Like this range is 100. This next box is like 80. This next box is 140, right? This is the 140. Like it's tradable. But when you're looking at volume, what looks much better for movement? This, right? We all would say this. So let me do one more example of volume, and then we'll go on to the next segment. I think the next segment is support and resistance. So we're gonna show you guys how to use volume with support and resistance. Okay, so what do you have here? All right, so let's say here. All right, let's go on 30-minute time from now. We used all other time frames already. Let's use this now. Let me just go quick. I'll explain support and resistance soon, but let me just go mark it off quick. You have a level here that price is bouncing off of. You have a level up here that price is bouncing off of. This is the range that you're in. So you know for a fact, in between these gray lines, you're going to range more. Once you break below, you are more likely to get volume. I don't know about this move though, because there's some stuff going on here that I may not like, but just to show you guys volume and just volume and nothing else, okay? This is the range you're in. Oh, okay, so you didn't break below. You didn't close below. You're still in the range. You're still ranging. You're still ranging. It's tradable though, but you're still ranging. Okay, some movement. Is it gonna just reverse? Or is it gonna continue plummet down? All right, so you started to break out and then you plummet down. All right. So in this case, you range, and you can see like what was your cleanest push here? Was it this or was it this? It was this. Look at this. Range for like, how many days of ranging was this? This was from the 23rd or 26th of January till the 30th. So 4 days of ranging, and on the 5th day, it dropped. So again, tradable range is like 140 pips, but you can kind of see where majority of the movement came from. You know what I mean? Came from below here. So that's pretty cool. That was pretty cool. So that is volume and how you identify it, right? So volume is one of those things that are pretty simple to identify, but if it gets a little difficult, just, you know, maybe like open up your tools or not, just start to draw lines and start to like just look left and look for ranges you can kind of X out and just pay attention to the cleanest pulls and pushes. As we continue to move forward, we can talk about, I guess we can talk about clean traffic now, or just mirror, because mirror also does play a huge part into volume. So like you can kind of see, for instance, like this pop here that went down. What are you mirroring? Looking left, I'll say this is what you're mirroring. So you like, look, I can guarantee you, okay, maybe not 100% guarantee, but 95% chance, once price taps into this box here, you're going to see a slowdown. Okay, it just reversed. But in the past, it did reverse, right? But this is what I mean by slowing down. When you get to these levels here, you want to make sure you are not part of it. You are out. You're not in that trade no more, because volume and clean traffic only goes up until the point where it has to mirror. Once it mirrors that zone there, you're running into like a level where you don't want to be part of. Like it's an indecision zone. You have no idea where it's going to go. It could reverse. It could continue to break down. Who knows, right? But if you know that that's a very dangerous level to be at on the markets, you want to stay out. You don't want to be part of it. So when price gets that zone again, you don't want to be part of it. If you took sells, we would have got cooked, right? You would have got cooked on sells at that zone there. Now, do you know it's going to go up? A lot of guys say, yeah, I knew it was going to go up. Look at that down support, you know, off of the FVG. But do we know? Do we genuinely know? No, it's a level where we're like, okay, it might route the other way, but I need to wait for my confirmation still. There's no guarantee of anything in the markets. The markets will move how it wants to move, right? Your job is to base it off of just the most recent zones, the most previous zones, and off of just what it's reacting off of. So in this case here, if price is going to mirror, that's where it's going to mirror until. So more examples of like clean traffic. Let me go to a level where I don't know what's going on at here, right? Okay, so this is interesting. Okay, so I guess you could say you have like some type of areas up here that you want to be cautious of, right? So that's that. You also have like, there's no range here. You're still fresh off a breakout. So at this area, you kind of don't want to be part of the charts. You have this right here, which is like your support here. This is the range you're in. So if you're going to create a range, it will likely be between this level and this level. That's where your range in. Anything above could be a breakout, and then below could be a breakout to downside, right? But if you're looking at something in the mirror, you're looking at this to mirror now. This move up. It's off of the same zone, same area, right? Supply and demand. So as you come up towards areas here, you're going to see that in the past, price has slowed down. Price slowed down in these areas here. So if price is going to slow down, then there's a high chance that this could be it. Yeah, this is a pretty key level where price could react off of. So let's see what happens here. Price could reject, it could reverse, it could continue to fly. I don't know. If it does fly, then I'm gonna say honestly, there's some more tough levels up here. So let me just move it up. If it does fly, then I'll say like you'll have, I guess, clean traffic to up here. But I don't want to get too deep into this. I just want to show you guys the volume, all right? And if it does drop, then it's gonna come down towards like here, because looking left, if you're looking to mirror something, as you're breaking into this range here, you're going to mirror this move down into the range. You're going to fill the range. right? You might have some traffic here, but you're gonna still fill this range here. Same goes for up here. You are gonna also be, and by the way, if you guys are getting lost right now, some of you guys might, in the next video, in the next segment of like support and resistance, I'm gonna be speaking about clean traffic and everything that I'm discussing here. I just wanna show you guys volume. But yeah, so let's see what happens here. Okay, so it didn't break below. Still in the range. You see how like if it's in a range, it's in a range between like this and this. You see how it came up tapped, almost tapped it, came down tapped this area, starting to just react and reject. So you don't know what's gonna happen yet. All of a sudden you continue to fly down, right? And as you fly down, you flew down towards here, and look where you struggled at. You struggled right there at that gray zone there, right? Because that's a level of indecision zone. You have no idea what's gonna happen there. So could continue down now, could continue back up. Don't know, but you know for a fact it's clean until then. Right? So like that's just like indication of volume and using traffic to indicate when that volume will end. That's what you want to use that for, okay? But yeah, that's about it for volume. Just remember, like you want to combine everything. So we spoke about today times. So the time zones that you want to pay attention to when you're trading the NY session exactly. Yeah, I guess I'm just going with people anyway. And then you have the news, Forex Factory, like what you want to pay attention to when you're looking at Forex Factory, what to look out for, what folders, and how it affects what. Understand that and make sure that you actually check that folder every morning before you trade, because sometimes I might forget a day or two, and then I'm like, what happened at 8:30? Where does volume come from? And I check it, I'm like, oh shit, yeah, there was a folder today. So you want to make sure you're checking that folder. And then obviously the last thing is just like understanding clean traffic and mirroring and knowing when that volume might end, right? And then eventually you can actually get to a point where like you say, okay, it's 8:30, you have a news folder. You just had a giant move though. You just filled the range. You filled the entire range. You're starting to tap a level where it's starting to struggle at. What's going to happen now? You know what I mean? Like what's going to happen here at this zone here? So if there's news and the direction for a day is like bullish, like for instance, this is obviously an example, but let me use another example. Let's go like here, right? So let's say like you came up, you fill this area here, and you're starting to range, right? You know for a fact now that, okay, at this zone here, you sort of want to be cautious about it because this is an area where prices struggled in the past. But if you have news here and you have overall downtrend here, is it possible that news can come out and you might see a spike up here to fill the range, and all of a sudden you might see price just start to do something like this, start to just continue back the other way afterwards? Right? So like you want to just apply those things. Like same goes to just the time frames. When you're looking at time frames, you want to make sure you're looking at all the different time frames and what price is trying to tell you. The same way for volume and news, you want to combine that with the price action and make sure you know that you're aware of what's going on, because news could print. Let's say news today is expected to come out positive. It comes out positive. You see a spike up. You know not to look for buys. You know to look to wait. Because if price were to flip bearish again, then it's going to fill the range down, and that's when that's your opportunity to take the positions down. Right now, you're combining price action with the news. That's kind of what I do every morning, or whenever there is news, right? But that's like when you start getting crazy with it. But that's really all that I'll say overall trading is, just combining everything that you know, right? So I'm not gonna go too far here. I'm gonna keep it as that, but I hope you guys have a better understanding of volume now. The next video, I'm gonna be discussing support and resistance and everything about support and resistance. So it should be a lengthy one, to be honest. I think so. And then I'll see you guys there, man. Peace out.